From Radio Free 102.3 KJLH, yet another Delete the Divide conversation. This one is from startup to structure, the legal and financial foundations for growth. This is an important part that I believe most businesses tank on when they tank, because they don't have their finances together. They don't have, I would say taxes is finances, right? Taxes and finance, this is kind of the same thing, would you say? Yeah, okay.
Okay.
So we're gonna talk money, y'all. We're gonna talk taxes, money, management, all that good stuff with DP Business Management, Ricky Smith.
Yeah.
And NDL Consulting, please welcome attorney Nicole Lewis. Let's have fun. Let's have fun and talk about the money. That's really what I want to talk about. So many people set up new businesses without the correct tax, legal structure, and business accounts as well. So why and what are simple steps to get them started? Like, when should you have a business account?
Well, you have to have a business. So that would be probably the first thing. So
Okay.
I would say that just kind of generally speaking in a more broad fashion, I think the first thing that you need to think about is, do I need to set up a business? What am I doing? I think you need to think about what your industry is, whether you're selling a product or a service, what your profitability is going to be, whether or not you're going to need capital. So do you need to raise money? Are you going to want to go public? And what kind of liability protections you need, because that determines whether you want something that's a limited liability company or a corporation. Then I think it's also whether you have infrastructure. So can you deal with the compliance and all the things that will go along with that particular business type?
Ooh, Attorney Lewis, I'm tired already.
So the main thing is don't overdo what you don't need to do, because we find that people sometimes are not at the point where they need to set up like an LLC or something like that. They may just be at a level where they need to be a sole proprietor.
So is there a cutoff, like, to when you should go into LLC? Can you give us a hint about that?
If you have liability concerns. So basically, no matter where you are, if you're like in a high-risk business, so if you're like in an in-person service business, or if you're like a contractor, those kinds of businesses, you want a little bit more liability protection because you don't want someone to sue you and take your personal home, right? So you want to ensure that you're thinking about that as it relates to industry, business type, what you're going to be doing, high risk.
So if I'm a producer and I'm producing a movie, then I probably want to do a LLC, or no?
Yeah, but that's for a number of reasons, not just the liability, because there's also some money things that happen at a certain level as well. But I think in terms of the finance, I think setup really has to do with what you think you're going to be doing profitability-wise.
Okay. Yeah, profitability-wise, as well as, are we talking about a production, or just when should we set up an LLC?
Well, I use the production as an example, so.
But just to piggyback on what Nicole was saying, depending on what level you are in terms of your business setup, should determine whether or not you're going to set up an LLC or a corporation, along with liability. I find that clients come my way and they have not necessarily begun conducting business. So if you haven't even started conducting business, you typically recommend setting up an LLC just yet.
Okay.
Let's see
What
if
about
this
an
is
account?
definitely, if you're actually conducting business, meaning generating a sale or providing a service, then you definitely need to have a separate business bank account, right? But you can operate as a sole proprietor, you know, for a certain amount of time or indefinitely. There's no requirement to become or to establish an LLC or a corporation. I always like to advise my clients here in California of one requirement, which is LLCs are required to pay
$800.
$800.
$800
I think that's important to know when you are starting a business. You know, there are a number of compliance, filing requirements when setting up these various structures, whether it be a corporation or an S corp. So there are a lot of different nuances. So the first thing, like Nicole said, is to start your business.
Yeah.
Let's determine if it's an actual business or
and
a hobby.
What determines if it's a business or a hobby? The money it makes?
Yeah.
Yeah.
That's the raw answer.
If you start making T-shirts, for example, and you don't sell any of those T-shirts, then more than likely we're going to say this is a hobby. Yeah.
Okay.
Yeah.
Right. You just like to sell T-shirts
or design T-shirts.
Oh, right. Yeah.
Because nobody's buying your T-shirts, or you haven't sold any T-shirts. Yeah. So.
Okay.
Yeah.
So what is the difference between an LLC and an S corp?
So an LLC is a business entity type, and an S corp is actually just a tax classification. So you can have an LLC that is just a normal LLC. It's basically a more simplified version. You have pass-through income, so you just report the income on your personal taxes. If you want a S corp designation, then you're going to be basically paying yourself a reasonable salary, and then you will pay a tax on the payroll, but you won't pay a tax on the you won't pay a self-employment tax. So there's no double taxation, but you're setting up a little bit different type of structure. I don't recommend an S corp election unless you're probably making at least maybe $50,000 to $60,000 a year in profit. The requirements are a little bit more strict for an S corp. You have to have minutes and annual minutes and basically do a lot of the compliance things that you have to do in a normal corporation as well. So those two entity types are a little bit more high level, a little bit more complex, more compliance involved. So as a small business starting out, you want to be sure you need that level of designation right out the gate. Like Ricky said, because just kind of based on what you're going to be doing determines how much of that you want to have to be able to follow up on, especially if you don't have a team or an accountant or someone that can assist you with those things, because you could potentially kind of mess yourself up if you try to go too far too quickly.
Okay, so before we get into the tax thing, I want to ask something else about the S corp. You say that you're obligated to pay yourself, or is there an out from paying yourself?
Well, you got to get paid, so the salary is the way that you would get paid as the owner if you're taking if you're going to make the election of an S corp. And I'm going to let the CPA expand on that.
And I'm going to try to make this explanation as simple as possible. So the government has pretty much thought through most scenarios that small business owners typically try to implement to avoid taxes. Setting up S corps is one of them. So in order to ensure that business owners are paying their fair share of the payroll tax, which when you're a sole proprietor, you pay what's called a self-employment tax. When you become an S corp, they know that, okay, the business owner is probably trying to avoid that self-employment tax. So what they did was they made a requirement: if your business is profitable, then you as the sole shareholder are required to take a reasonable salary. Why? To ensure that you're paying your fair share of payroll taxes.
But
That's
what
it in a
about
nutshell.
people who, I don't know, like Joel Osteen, who pays himself $1?
Well,
that's not a reasonable salary.
It's not, but that's again, that's how it's described, reasonable. What the way it's phrased is
Joel Osteen is likely a nonprofit,
and
so it wouldn't be, the same guidelines would not apply.
Right. It was a bad example, but there are some corporations where the owner pays himself $1.
Right, because what it says in essence is the reasonable salary says what you would pay someone else to perform the task that you're performing. So
Nobody's
you can
paying anybody $1.
Exactly. So
that's craziness.
I typically advise my clients that have S corps and they're profitable. I say, pay yourself as much as you need to live on, because we're going to get into separating your business per person. Then you don't have to pay yourself a salary.
Okay, so what's the most popular tax mistake small business owners make?
I'll give you 3.
Okay.
Okay. Number 1, not planning for their tax liability come year end, meaning putting, I typically say 10% aside of the revenue that you've earned.
Right.
Putting 10% aside just so you're prepared.
Okay.
The second would be paying your labor 1099s versus W-2s.
Yes.
Everybody thinks that they can just pay all of their labor 1099 and to avoid employer taxes. See, it always comes back to business owners attempting to avoid certain associated taxes. So paying everyone as a contractor, it can work up to a point. But what inevitably always happens is one of your former contractors will go and apply for unemployment.
Unemployment.
Now that has triggered probably an audit. Right? An audit of your 1099 labor versus your W-2 labor. So that is a big issue.
Okay.
The third one is commingling the sales tax that you collect. And this pertains to obviously businesses that have sales. So like
product-based.
Product-based, yes.
And stuff like that.
Yes. So you are essentially, as a business owner, a middleman for the state of California. So you're collecting the 10%. You should put that 10% aside in a separate account because you're a pass-through, because it doesn't belong to you.
Right.
Just to keep it simple.
None of my money belongs to me.
Yeah, you're collecting the 10%.
Especially in California.
Right, it doesn't belong to you.
My
And I've seen it time and time again where the business owners, they make the sale, the total amount of the sale goes into their operating account. They do not separate the sales tax that was collected, and they keep operating, and come month end or quarter end or however often they need to file, the 10% that they've collected on all of those sales, they no longer have available to turn over to the state.
Wow.
And that becomes a big problem. So those are my 3.
Tax tips. Who?
Yeah.
The accountant.
Okay.
I'm gonna hit you with the back-to-back. Let's go.
Okay. Tax tips.
Tax
we on tips already.
All right, tax tips. As a small business owner, the first thing that any business owner should do is establish an appropriate record-keeping system, meaning a bookkeeping system. Why?
I don't know how many do that.
Yeah. And
especially hard. Is it not hard if you're a small business to do that?
No, because in the digital age, we have software programs out here, low-cost software programs that are extremely user-friendly. Some as low as $15 a month.
Okay, that's good to know.
That's good to know. You can link to your business bank account that we already talked about, that the business owner should establish, that would import those transactions. Okay. And all the business owner literally needs to do is go in and categorize it. No, they're not even putting the numbers in. It's being imported.
Oh, okay.
Yeah. So they're literally
imported from the bank account.
Yeah.
Oh, wow.
We have technology now.
Oh.
Yeah.
Okay.
And if it's just a business bank account, then you don't even have to separate anything. Everything just comes in clean.
Exactly. So having adequate record-keeping system will ensure that all of your deductions are being captured. Okay. Why? To minimize your tax liability.
So now, is there a such? I'm sorry. Go ahead.
No. Go ahead.
Is there a such thing as not making a profit but still spending the money that's there?
Absolutely.
Yeah.
Yeah, absolutely. I have some young adults that I'm training on bookkeeping right now as we speak, and that's one of the things that I teach them, that on paper it can appear that a business is profitable,
right,
but that not really be the case. Meaning, you can have a sale where you've issued an invoice and not collect on that invoice. So on paper, it may appear that, I have this sale for $10,000. Right. But if that customer never pays you, then you didn't really make the $10,000. Yeah.
Okay.
Yeah.
So let's talk about some legal protections. What legal protections should be in place for small businesses?
Well, I think it depends on, again, the type of business. In terms of what you need, I think as a small business, if you are going to set up an entity type, you want to make sure that you have the appropriate operating agreements. So for an LLC, you would have an operating agreement. For a corporation, you would have bylaws. So these are things that kind of give you the roadmap for how to run your business. It should address everything from how your business is formed to who has the right to make decisions. Are there any indemnity clauses for people who are in management level positions? Even down to how you dissolve the company if something should happen. Can you transfer ownership? What are the rights of the shareholders in terms of those things? You want to chime in on something?
Yeah, no, and I was just going to say, just to even bring it down some, just insurance, liability insurance.
Absolutely.
Yeah, errors and omission insurance, depending on the type of business. Workers' compensation insurance if you have employees. Yeah, that's the insurance is very important to have for your business.
For your business.
Yeah, if it's something that you need. Now, obviously, some industries or some businesses, or if I'm just a starting out, let's say, graphic designer, I may not need to run out and get liability insurance, right? So it has to be appropriate for what you're doing, and the cost has to make sense for what you're earning and what your profit is.
Is it difficult to dissolve a business?
It depends. It depends. Unfortunately, everything with the legal aspects of businesses is generally a depends, right? It depends on if it's just you, then it's not hard to dissolve the business because you don't have to work out or negotiate anything with any business partners, right?
Got you.
And depending on the legal structure that you've set up, it's pretty easy to dissolve companies. In California, you can actually just go online and dissolve a company.
Yeah, if all your tax returns are
correct,
and
if you're up to date, right?
Yeah,
you
cannot dissolve a business with outstanding filings, whether you owe or not. All of the returns have to be filings.
You have to be up to date on all your, and that's in California has a lot of strict compliance rules, which is why we try to, when we're speaking with clients, we have to let them know, have you thought through what's going to be required in order for you to maintain compliance with the state of California? Because a lot of times people want all these extravagant setups, but they don't understand what's involved.
Right.
And I think it's also important to know what you don't know. So you don't always have to, if you don't have the money to go out and let's say hire a CPA or attorney, you can Google things. There are things, there are sites you can go to that you can get some of this information on your own, so you can figure out where it's important to maybe spend a little bit more time and energy. Because I can tell you one thing: it's always going to cost you more to fix something after it goes wrong than it will for you to do it right from the beginning.
Right.
And
Absolutely.
so that's something that I think we impress upon our clients all the time.
Yeah, I tell you, when people tell me they have a business in California, I be thinking in my head, you lying? Because there is no way with the requirements and the financial, the financial responsibilities.
Yes, sure.
And not just California, specifically Los Angeles. Because if you have a business in Los Angeles, you have to pay on what you make for
the city tax. That is correct.
And those are not things that people immediately think about, right? They think about, I need to go form this company, I need to contact the IRS. You got to have a responsible party for the IRS, because we didn't really talk about the EIN, getting an EIN. That you need to open up your bank account, right, for your business. So if you want to have a sole proprietorship and you don't want to set up a company, but you want to have a bank account in your business name, you need to get a fictitious business name statement and get a doing business as name, so that you can then get that EIN in that business name and set up that bank account. Again, keeping your records separate, your accounting separate, so you can have no issues with your taxes after those tax returns are submitted.
Right. Well, but yeah, the fundamentals, I mean, the basics are getting that tax ID number, setting up the DBA, as Nicole just said, or LLC, setting up the bank account, and setting up a formal set of books.
Yes.
A bookkeeping. So stay right there.
Okay.
And then you can go
Stay
from
right
there.
there. We'll be back.
Okay.
Hey, you look at my business credit card, it's just lunches. I'm just eating everywhere. I eat every day, 3 times a day with somebody. I'm like,
well, you get 50% of that, I think, right?
Yeah. Yes.
Like
right now.
Right now. Oh, is it going down?
But I'll tell you this, because I think one of the questions was,
oh, my bad, let me see. when to get a business credit card.
No,
what
I'm
not
just
to
kidding.
charge.
I'm just kidding. But speaking of like meals and entertainment, those are one of, when people ask me, well, is there something that triggers a red flag? That's one of them. Why? The IRS looks for what they consider low-hanging fruit, and it's easy to catch a business owner on meals and entertainment and mileage. Why? Because you're expected to have documentation, some sort of formal record. Who did you have lunch with? What was the purpose? Yes, of this meeting. Yeah.
Okay. So, but when do you get a business credit card, and what shouldn't you charge?
In my opinion. In my opinion, you should get a business credit card as soon as your business is earning income.
Okay.
Yeah, to separate, to protect your business checking account. You know, I prefer to operate off of a credit card. What shouldn't you charge? Any of your personal expenses, just to keep it simple. No commingling of your business expenses with your personal expenses. Not your children's daycare, not the spa, not the hair salon. No commingling.
Hold on. Wait a minute. I am an actress.
Okay.
So hair should be on my business card.
Sure.
It can if that is what, but that's a business expense,
that is
right?
True.
That's not a.
That is true.
The wig I'm wearing now is.
You can look good personally, but it's
not a wig.
Yes.
It's a business. It's a business expense.
This $1,500 right here should go on my business account. I am conducting business as we see IRS. We see it. And it should be deducted.
Yeah, absolutely. But for actors and actresses, yes.
Yeah.
Okay.
And entertainers.
And then hosts of panel discussions.
Yes.
And another pitfall of commingling that a lot of people don't know is that they have this thing called piercing the veil. So even like corporations, if you're commingling funds, if you get into litigation, you allow people to pierce the veil and go behind the corporation, and you could end up with personal liability in a scenario where you're supposed to be protected, which is why you set up the corporation in the first place.
Explain piercing the veil again?
So you're piercing the veil, what's called piercing the veil behind the corporation, right? Because generally, you don't have a liability in a corporation if you're doing things even as a managing shareholder or CEO, president, whatever.
Entity.
It's separate, so you don't have any personal liability.
Right.
But if you commingle those funds, then the
now
court
you
can pierce that veil and go behind and make you personally liable and responsible for things.
So let's get one piece of advice that is going to dramatically help a small business legally.
I think legally, again, like we said earlier, I think it's to take your time, think about how you want to set up your business structure, what your profitability is, whether or not you need to raise money, and whether or not you need liability insurance, and whether or not you have the administrative resources to kind of keep up with that structure.
We didn't even get into the nonprofits. That's a whole nother story.
That's a completely different thing.
We're
We're making money.
To be continued.
We're making money on this.
When people say I have a nonprofit, I be like, Lord, they lying. They lying.
We're making money.
They lying.
Yeah, this is great.
Things you have to go through to get a nonprofit is crazy. Okay, so financially, tax-wise, the one thing you would tell someone with a small business, what exactly they should have to do tax-wise to protect themselves?
Tax-wise, make sure that you avoid commingling your business funds from your personal funds. Set aside at least 10% of your earnings or revenue for tax liability.
And I want to know too, because the people want to know. The people told me to ask you. Now, what's this software you can get to help you? That's $15 or I don't know, any software.
Okay. The low-cost software will go with FreshBooks.
FreshBooks, y'all got that down? Good.
We have
FreshBooks.
Xero.
Xero.
And for those, that's Xero. And and there's always the larger company, which is QuickBooks.
Yeah, and they have a $15 option as well.
Yeah, called Simple Start.
That's right.
So QuickBooks has Simple Start. And so QuickBooks has a number of subscription options that allow you to scale.
Okay.
Yeah.
All right, great. Well, thank you so much, ladies. Miss Ricky Smith and Attorney
Anytime.
Nicole Lewis. Thank you very much. And with that, Delete the Divide concludes this podcast series.